Good morning. This is another installment of Florida Down Payment Assistance Programs for first-time home buyers. It's sponsored by Mid-Florida-Realty and FloridaDownPaymentAssistance.com. We're your local Florida experts in down payment assistance home financing. We've got agents throughout the state of Florida, and our phone number is 863-800-1011. And there is no cost to call us and see what we think. Anyway, today we're going to talk about a brand new program for Florida first-time homebuyers, and that's the 101% financing program. I think you'll find it really interesting, and there's going to be a lot of people that can qualify for this absolutely magnificent program. My name is Roger Lazzarino, and I'll be your host for today's seminar. So the purpose of this particular Fannie Mae loan product, it was designed to help folks who have good credit achieve the American dream of home ownership by removing the largest obstacle, which is obviously the down payment. This program is very unique because the rates are very affordable and there isn't any costly mortgage insurance involved in any form. There's no upfront mortgage insurance and there's no monthly mortgage insurance. Of course, that means your monthly payments are going to be lower because there is no mortgage insurance. And for those folks that don't realize, mortgage insurance protects the lender if you default on the loan, but it doesn't protect you at all. This program requires no down payment technically. However, as with all real estate purchases, someone's going to have to pay the closing cost. And because this program allows for 1% of the financed amount of the second mortgage, which again it breaks down as a 97% first mortgage and a 4% second. And what happens with that 4% is 1% of the financed amount goes towards helping you pay the closing cost. So you're that much closer to your goal of purchasing a home. We at Mid-Florida Realty, we try to negotiate with the seller to have them pay as much of the closing costs as possible. But please realize that each seller has a different selling circumstance, and we can't promise the seller's going to pay for any of the closing costs. Some will and some won't, and that's really the long and the short of it. And they're definitely not required to pay any of the buyer's closing costs. Now, this particular loan program really doesn't have a name. We call it the 97-4, and what that stands for is the first mortgage is a 97% loan to value, and the 4% is the second mortgage, which fills in that 3% and actually throws on another 1%. So you have a 101% combined loan to value. Now that second mortgage, what that's for is obviously to cover the remainder from the 97%, or the difference between the 97 and the 100% financing, and the one additional percent is typically used to help pay for the closing cost. So one of the nice features about this loan, as I said, is that you're already 1% ahead of the game in terms of paying for your closing cost. Now, when you do have to pay for the appraisal, that money also goes towards your closing cost, and that's, of course, paid outside of closing. So it's an excellent program, and it really helps pay for your closing cost and all of your down payment. Now, there is another variation of this program that does not require you to be a first-time home buyer, and that's something that I would rather talk individually about, because there's just so many what-ifs and different variables that it's pointless to start shouting out a lot of the different variables. So that's one of those things where we would just need to talk to you individually about. The loan structure on this product, again, is a 97% first mortgage and a 4% second mortgage. And this Fannie Mae product can only be originated as a Fannie Mae conventional conforming loan on a primary residence with a second mortgage linked to it. If you have the 3% down and you don't need the second mortgage to cover the down payment, then we'll probably use a different product. And unlike virtually all of the other first and second mortgage packages for first-time home buyers, the second mortgage has a unique feature. It's an interest-only loan, so your payments are a little bit lower than if it was a fully amortized loan. and it uses the same note rate as the first mortgage, which is very, very rare, in that most of the time what you have on second mortgages are a lot higher interest rates. And of course, since there's no mortgage insurance, this helps the buyer-borrower because the monthly payments can be much lower compared to a typical first and second mortgage loan package with mortgage insurance. So again, this is a phenomenal product. Now we're going to talk about some of the things that you really do need to know, because these are important and can either cost you money or save you a great deal of money. Please understand that this particular loan program, there are different lender program pricing levels depending on the lender's profile. Mid-Florida Realty works with both types of lenders and loan variations, so with us, there's no guessing game. You are going to get the very best program for your scenario. Just realize that the higher your credit score, the lower your interest rate is going to be, because this particular program is credit score sensitive, and that's how the pricing works with rate adjustments on the interest rate. So again, the higher your credit score is, the better the interest rate you're going to get. And that's really the big takeaway from this. Just realize that some lenders are going to have to charge you what's known as discount points because of their profile with this program, and other lenders aren't going to have to charge you for the same score any discount points. And of course, we've got a pretty good feel of who can do what. So again, that's something that you need to be aware of, and it's something that we are constantly aware of. I'm going to explain a little bit of this, what a discount point is and what it's used for. A discount point is actually used to buy down the rate. And if you've got credit scores that are less than 720, some of these lenders may actually have to charge a discount point or two to get your rate down to what one of the other lenders that is not required to charge discount points to give you the same rate. So one discount point equals 1% of the loan. So if the loan amount is $225,000, you're talking about a discount point of $2,250 added to your closing cost. If you have to pay 2 discount points, then you're looking at $4,500. So this is, again, something that you need to be aware of, because it would impact your closing cost. And there's no question in my mind that the lenders aren't going to tell you that if you go to a different lender, they may not have to deal with these discount points that you'd have to pay. So again, if your credit scores are less than 720, you'll for sure want to talk to us. And of course, we'd love to hear from you anyway and get you set up on the right program. So that's, again, another one of those words to the wise, and hopefully we'll be hearing from you. So now I want to talk about guidelines. Of course, probably my least favorite thing to talk about, but as a loan officer, you have to know your guidelines. And for the guidelines on this product, your minimum credit score is going to have to be a 660 middle score, but that doesn't guarantee that you'll be eligible for the loan. Obviously, the higher your credit scores, the better your chances are to be approved eligible by automated underwriting, which is really what all the underwriters use now. Nobody manually underwrites this product. It's against the guidelines. And the maximum debt-to-income ratio is the lesser of 50% or whatever automated underwriting approves. And what that debt-to-income ratio includes is your new house payment, which includes the principal, interest, taxes, and insurance, and any HOA fees. It does not include the rent that you're paying now, because you're not going to be paying it. It also does not include anything such as your car insurance, or anything that does not appear on your credit report is generally not counted in that maximum debt-to-income ratio. So if you're a first-time home buyer, your maximum loan-to-value on the first mortgage is 97%, and the combined loan-to-value is 101%. If you're not a first-time home buyer, and of course you can still use the program, but you'd have to have 5% down. With that being said, though, that because you're going to have a 4% second mortgage, you'd actually end up with realistically 1% down, because your maximum loan to value, if you were not a first-time home buyer, would be 99%, and 105 would be the maximum CLTV. So again, it can be done, and you just need to talk to somebody that knows how to do it. Another guideline to this program is you can't use this for an investment property, and you can't use it for second homes. So you can only use this for your primary residence. Now we're going to talk about the buyer doing their job. While no one knows all of the obscure underwriting guidelines that can pop up, our best advice to you is to let your loan officer know if you've had any financial problems or issues in the past, because you don't want the lender to find out when they pull one of the many reports prior to you receiving your final approval. The issue that you didn't disclose may be a deal stopper that could have been fixed at the very beginning of the process. But it's too late to do anything about it when you're a week away from closing. And this really does happen. Sellers may or may not be in a position to extend the closing date, or they may not want to extend the closing date because they received a better backup offer. And yes, that really does happen too. Remember that you've already paid for your $500 appraisal and your $400 home inspection, and you may also lose your 1% earnest money deposit depending on how the realtor wrote up the purchase contract and how many days that they have the financing contingency set up for. Full disclosure in the beginning of the process is crucial for a smooth loan closing and a happy ending. Sometimes the question comes up, do y'all work with outside realtors and loan officers? Well, the short answer is no. It's our opinion that mortgage financing is the most important part of any real estate transaction. Financing is actually the beginning and the very end of the home buying process. Mid-Florida Realty believes that we know more about mortgage financing, especially down payment assistance, than any real estate company in the state of Florida. Our loan officers have access to virtually every worthwhile down payment assistance program in the state. The Mid-Florida Realty agents who are licensed mortgage loan officers don't charge our buyers any additional financing fees, and you won't be asked to pay any additional charges outside the primary lender's standard and customary loan fees at closing. It's our position that if we help the borrower by answering loan questions, suggesting different mortgage loan programs, and assisting in the loan origination process, then we should be the buyer's agent. While you're obviously free to work with whoever realtor and mortgage loan officer you want to, we'll always answer the phone and take you to see as many homes as you'd like to, and help you step by step through the intricate world of mortgage financing and the home buying process. Because of our extensive training, Mid-Florida agents will ensure you obtain the very best financing available for your scenario. Because we provide these specialized services free of charge, we don't work with outside realtors. We feel that we can, and we usually do, help save people so much money in the monthly payments, mortgage insurance, and/or interest during the life of the loan. We need to be the buyer's realtor of record for all the obvious reasons. If you think we can help you in your home buying process, please don't hesitate to give us a call. If you'd rather fill out one of our online applications, you can do that too. It doesn't cost you anything but time. We look forward to hearing from you.